Hey folks, welcome back to another episode of T2 SMC Trader. In this video, we're going to learn the real trading. Trading is not like the setup. There is some kind of liquidity taken, market structure shift, fair value gap. There is liquidity, so I'm going to take that entry. It's not trading. Trading is an art. Over here, you have to read the price carefully. You have to see what happened in your past. Then you will take your decision depend on your past. This all I'm going to talk about in this video, so maybe it's gonna be a little longer. I'm sorry for that, but it will be helpful for you to understand better price action. If you are new to my channel, don't forget to subscribe to my channel and please don't forget to give me a thumbs up. Before that, I would love to really appreciate to all of you guys for taking the membership. I just got 58 membership by this month. Okay, it is really unexpected, but thanks to all for supporting me that much. So let's go to this video. You can see this is the all-time high. So either way, this is your buy side liquidity. And market went lower, made this relatively equal lows around that area, this low and that low. They are relatively equal lows. So you have this buy side liquidity, which is obvious liquidity, and you have this sell side liquidity. Below this buy side liquidity, you had some other buy side liquidity around that area. So let me mark that buy side liquidity. So this high and that high, which is a shallow run. So I would love to mark the shallow run as my buy side liquidity. So this was the buy side liquidity. Above this buy side liquidity, below this sell side liquidity, you have a lot of fair value gap over here. See? Now, here I told that if you see a fair value gap, which is at the level of the liquidity, so this was the previous buy side liquidity, then you are not going to mark that on as your fair value gap, which is going to be important for you. No, it's not going to be important for you. The reason is this is at the level of the buy side liquidity or above the buy side liquidity. So below that fair value gap, which is your first fair value gap. So let me mark that on. This is going to be your last fair value gap. So I'm going to mark that on as my last fair value gap. So just keep that in your mind. This is how you should mark the last fair value gap and the entry fair value gap, because they are important. When market is below here, then you should observe those fair value gap. Is it going to break? If it is broken, then this buy side liquidity obvious. If it's not broken, then the buy side liquidity is gonna be very difficult to be taken. Below this last fair value gap, I have another fair value gap, which is my entry fair value gap. So there is my entry fair value gap. Just let me mark the entry fair value gap from there. So this is my entry fair value gap. I have these two fair value gap over here. Keep that in your mind. This is all from hourly chart. So from hourly chart, all you have to know that this is the buy side liquidity. Okay, obvious buy side liquidity. Below that buy side liquidity, all time high. And you have this entry fair value gap. You have this last fair value gap. You have sell side liquidity around that area. When market fall, where did it fall? Exactly, it came to this entry fair value gap, and then it reversed from the top of this entry fair value gap. You have this last fair value gap from the hourly chart. So to that specific leg, this is the last fair value gap. If market would love to keep falling, then it has to break these two fair value gap. So see how this entry fair value gap hold the price, send it back higher. So this entry fair value gap and that entry fair value gap, both of them are extremely strong. Okay. And below this entry fair value gap, this last fair value gap is the last stage to hold the price, and above this entry fair value gap, this is the last stage which can hold the price, send it back for the sell side liquidity again. Now after this, I would love to go to 15-minute chart. Today is Thursday and I'm going to explain the PM session only, but for explaining the PM session, I need to explain the AM session little bit. This is the new day opening gap. That means 5 PM close of Wednesday and 6 PM open in Wednesday. There is a gap. I just marked that gap and the 50% of that gap. That is my new day opening gap. Okay. At the same time, all you can see in this small price action. Now you don't need this much price action over there, because you have already marked the entry fair value gap from your higher time frame. Why I marked it from hourly chart, not from 15-minute chart? If you come here and look at the fair value gap, this fair value gap is from here to here. So I just minimized it little lower, okay, just little lower. But if you mark the entry fair value gap from 15-minute chart, there is nothing wrong. And over there. You can see, you can just mark that one this way and you will see it has been rejected from there. You have this last fair lookup from 15 minute chart over here, just below the hourly last fair lookup. Now market is not actually going to close this one so far, so I'm not interested to mark the, to give the importance to the last fair lookup here. The important is this anti fair lookup. Okay, if I see something not good from the hourly chart, sorry, 15 minute chart, then I go to hourly chart and then I mark the fair lookup from the hourly chart. But here both of them are the same, because you can see it's just little difference. Okay, so I'll keep it right now, the anti fair lookup over there from 15 minute chart. Okay, it will be easier for me to explain the price action over there, because I would love to show you something that is really important. Today is Thursday and all you can see, this is the run from Thursday. Okay, morning session 9:30 run was that. Now you knew that you had this buy side liquidity around that area, that was your buy side liquidity. At the same time, below this buy side liquidity you had another buy side liquidity, this high and that high. They were clean highs, right? Very clean highs. That was also your buy side liquidity. You can, if you see, take a closer look, you will see another buy side liquidity which is also very clean highs, that high and that high. They are also clean highs. So this was also your buy side liquidity before today. So yesterday market has made this buy side liquidity. The day before yesterday, in Tuesday, actually Tuesday, market has made that buy side liquidity, and finally I have this extreme buy side liquidity inside this entry fair lookup. Now I would love to come here in this small price action, because I don't need what I have before here. Okay, so I need all of this price action. If you take a closer look around that area, what happened actually over there? You saw market fall around that line. Where did it came exactly? To that rejection block. So I just marked the rejection block. Is it precise? Perfectly. It tapped to this rejection block, went higher. When it went higher, this was the new day opening gap. This new day opening gap hold the price, send it back higher again. Okay, this is the whole price action from today. That means Thursday. Now, if you take a closer look over here around that area, market first taken some sell side liquidity around that area. All the sell side liquidity has taken over here. After taking this sell side liquidity, market went higher, closed above this new day opening gap. When it closed above this new day opening gap, it come back again to that new day opening gap, make it support. This new day opening gap was the support. At the same time, this wick went little lower and trade this entry fair lookup from 15 minute chart. I'm just going to mark the entry fair lookup only, because last fair lookup I don't need to mark it. It didn't reach until that area. It tapped to this entry fair lookup, went higher again. After that, it come back again to the top of this new day opening gap. Instead of this new day opening gap, you have this order block over there. Okay, so this was the order block. Now, when market has traded that order block as well as this new day opening gap high, look at the reaction from the high of this new day opening gap. You knew that market is going to take that buy side liquidity, because that is so clean, so obvious. Market is above this new day opening gap. What is more obvious? Market is going to take that buy side liquidity. So that is more obvious. Above this buy side liquidity, you have this buy side liquidity, and finally extreme buy side liquidity. Excuse me. Maybe I'm speaking little faster, because I really would love to make the video as short as possible. Okay, that's why I'm just talking little faster. Now below here you have only this sell side liquidity. Instead of this sell side liquidity, you don't have any other sell side liquidity, no relatively equal lows. Look, there was no relatively equal lows. So if you would love to mark this sell side liquidity as your target, then market has to break this new day opening gap, because this is the strongest fair value gap, right? Compare the normal fair value gap, new day opening gap is so strong. So if it could close below this new day opening gap, I wouldn't look for this buy. Instead of that, I would look for that sell side liquidity, because this new day opening gap was broken. But as you can see here, this is the first time when market closed below this new day opening gap. That was the fake breakout. This fake breakout created over there only to trade that entry fair value gap from 15 minute chart. Then market went higher, tapped to this breaker block, went higher little bit. Another market structure shift, and you can see actually market went higher around the 9:30. This was the 9:30. Around 9:30 market went higher. This was the news candle actually. Around the news 8:30 news, market tapped to this order block. At the same time, new opening gap high, then went little higher. Did it take that buy side liquidity? No. Where it is exactly above this new opening gap. How do I know that market is going to take that buy side liquidity? Because look how beautifully market is very near to this buy side liquidity. It's very near to that. This fair value gap is holding the price. This strong fair value gap, new to opening gap, is holding the price. So what should you think? Is market going to take this sell side liquidity? Because if market would love to go for that sell side liquidity, it has to break this resistance. This is a very strong break. Okay, that means some kind of wall. It has to break that wall. If it can break that wall, then it is very easy to fall until the sell side liquidity. But if it failed to break that wall, then it's obvious that market is going higher to take that buy side liquidity. That is so obvious. Then this buy side liquidity, finally that buy side liquidity. Then around 9:30 market went higher. Take all of this buy side liquidity. Trade the constant encroachment of that 15-minute fair value gap, and if you just mark the fair value gap from hourly chart, you will see the same thing. It has been rejected from the constant encroachment of the hourly chart. Okay, so it is the same thing, and you can see perfectly it tapped to this hourly fair value gap constant encroachment. Now, if market would love to fall, it should not work with the upper portion of the bearish fair value gap. This part is important. For example, if market would love to go higher, it should not work with the lower portion of this bullish fair value gap. If market would love to fall, it should not work with the upper portion of this bearish fair value gap. Where did it go? To the constant encroachment? Exactly. After trading that area, boom, market fall. When market has taken this buy side liquidity, that buy side liquidity, that buy side liquidity, traded that constant encroachment, what should you look for? Sell. I was in my live streaming. I framed my sell setup over there, where most of the people were so nervous about today, and I told that I'm the wizard, so I'm going to take the profit from this market. I will do that. Okay. So after that, I started to look for sell. Where is my sell side liquidity? There is my sell side liquidity. Now my target is this sell side liquidity. I'm not going to stop until this sell side liquidity. I will start to look for sell. Why? Because market doesn't have any buy side liquidity left except this all-time high. Except that all-time high, market doesn't have any kind of buy side liquidity. So what I should look for? Only sell side liquidity. Now, when I frame my trade until that, from there, I told that you can't hold your trade below this new opening gap because this new opening gap is very strong. It can hold the price, send it back higher again. Okay. So when market came here exactly to this new opening gap, what should you look for? You should look for buy? No. Why? Because you don't have the buy side liquidity. Should you look for sell? No. Why? Because this new opening gap didn't break. If this new opening gap has broken, you will start to look for sell again. If it doesn't break and started to go high, you should avoid that high run. This is the part most of you are not ready to accept. Brother, that is a very nice buy setup, or sorry, buy run. I can't just avoid that buy run. So what you will do, you will actually push your button over there. There is the problem. This is the reason you don't understand the price action. You don't get the precision because you are not ready to let that buy go. Why you should frame your buy setup? Yeah, I can see that it has been rejected from that new opening gap high. I framed a setup over there in my live just closing before closing my session, but I told that this buy is not valid because you don't have any buy side liquidity. No, brother, I have the buy side liquidity here, this high. Now, I don't mark single high as my liquidity. I don't mark them as my liquidity. I always go for relatively equal highs like this or like this type of relatively equal highs. See this high and that high, very clean relatively equal highs. So I always mark them as my liquidity. Otherwise, single high, if you just keep marking the single high, in market you have 1,000 single high, 1,000 single high. Okay? Trust me. So please don't mark them as your liquidity. Instead of that, try to mark only the relatively equal highs or the lows. Okay, I have already made some video about the uh, drawn liquidity. You can watch them, it will be insightful for you. Okay, so as you don't have the buy side liquidity, you should not look for buy, you should let this run go. When market is going higher, what should you look for? A bearish fair value gap. If you find any bearish fair value gap, you will start to frame your sell setup again. Okay, so from here, when market tap to this new opening gap high, you will look at to that specific leg, where is your fair value gap. Now if you take a closer look, you have this bearish fair value gap around that area, you have another bearish fair value gap around that area. Now if you just mark that bearish fair value gap around that area, and if you start to look for a sell setup from there, it's gonna be difficult for you. Why? Because this from here to here, it's a very small range. You can't hold your trade below the new opening gap, because this new opening gap is very strong. So your sell setup is valid until this new opening gap high. Your sell setup is valid until this new opening gap high. As this is very near to this new opening gap, I will be unable to frame my sell setup from that fair value gap. So I'm going to remove that fair value gap. Instead of that, I'm gonna keep that fair value gap from 15 minute chart, the bearish fair value gap. So if when it tapped to this new opening gap and went higher, reached until this 15-minute bearish fair value gap, I will start to look for sell from this 15-minute bearish fair value gap. Okay, now this price action I will talk later. Now I need to go to 1 minute chart, because as I told, I would love to explain the price action there. Before going to the 1 minute chart, I would love to add something else. If this bearish fair value gap hold the price and send it back for the sell side liquidity, what should it do? This fair value gap, look, the upper portion of this fair value gap should not be traded. Even if it has traded the upper portion of this fair value gap, there should not be body, there should be only wick. See over here, yeah, wick went to the upper portion, no problem, but body below this constant encroachment. So it should be happened over there as well. Try to understand, brother. After taking the buy side liquidity, rejecting from the previous or old entry fair value gap or strong 15-minute fair value gap constant encroachment, market went lower. This is the reaction from the new opening gap. You marked another 15-minute bearish fair value gap. You are knowing that market has only the liquidity, sell side liquidity. So market has no intention to go high. It can't go higher. That should be your intention. That should be your expectation. Now, if it would love to fall, it should not work with the upper portion of this fair value gap. If it works with the upper portion of this fair value gap, then you can't think that market is going to fall dramatically. Like the way it went higher dramatically, it fall dramatically. You can't think like that way. If really market would love to fall dramatically, it has to work with the lower portion of this fair value gap. Okay, here when I will talk about this thing, this price action, remember what I told you over there. As this is the bearish fair value gap, I am expecting lower run, market should not work with the upper portion. If it work with the upper portion, then you can't feel that, you can think that market is going to fall dramatically. Instead of that, you have to be very choosy around that area. Okay. Now I'm going to 1 minute chart. So let's go to 1 minute chart. Now there is my 1 minute chart, and you can see this is the first time when market came to this bearish fair value gap. So when it has came to this bearish fair value gap for the first time, you will start to look for your sell, right? You should look for your sell. Now you can see there was a market structure shift around that area. This area you had a market structure shift. This is a valid market structure shift. Now, how market has been shifted over there? Market went higher, make a swing low, take all the liquidity. Then you got the market structure shift? No. What happened? Market made another swing low, it went higher again, make another swing low, it went higher again, then give you the market structure shift or the displacement. Are you going to think that this is a very nice market structure shift? If you think like that way, I'm sorry to teach you, because I already explained in my previous videos. The market structure shift should be happen dramatically and instantly. Okay, it has made this swing low, which is valid for shifting market structure, went higher, take all the liquidity. This fall should shifted the market, but it has made lot of swing high, swing low before shifting. So why you are thinking that that is the market structure shift? At the same time, market has worked with here the upper portion of this entry fair value gap. Sorry, that bearish fair value gap from 15-minute chart. Now it can trade from the 1-minute chart by body, but it should not trade it from 15-minute chart. Okay, so the fair value gap trade should be analyzed by 15-minute fair value gap. I would love to come here to explain the price action, why market went higher. In my life, when I framed this setup, remember this fair value gap? What is that fair value gap? After making the setup over there, market structure shift, namely price has traded the fair value gap, order block, then market went lower. This is that unfilled area. Remember the unfilled area. I told that I want to see this is going to be unfilled. So I'm going to mark that unfilled area. I wanted to see that it will be unfilled. Okay. So here, that is that unfilled fair value gap. Then market fall, dramatically fall, reach until this new opening gap. After reaching to that new opening gap, market is going higher. You know where market is going. Where? Here, to this fair value gap, bearish fair value gap. Even if market came here, it wasted time around that area. There was no setup. Look over here, take a closer look. You are in rush, that's why you saw this is your market structure. So either way, this is the only market structure shift which is looks like valid, but this is not valid. The reason I have already explained. Then market went lower one more time, went higher. Where did it go? To close that unfilled fair value gap. Did it close 100%? Absolutely. If it doesn't close that fair value gap 100%, then you can't look for the breaker block. But if it can close that on 100%, there is not even a one tick open, then you will start to look for your breaker block. Now, if you watch my breaker block video, you already know how to look for the breaker block. Okay, I'm not interested to explain how to look for the breaker block. Either way, so it went higher. What else do you see? What is that? When market fall dramatically, what is that? That is your last fair value gap from 1-minute chart. It is the unfilled fair value gap at the same time. This is the last fair value gap from 1-minute chart, right? Absolutely perfect. Where it worked to the upper portion of this fair value gap. This fair value gap is from 1-minute chart. Now I'm going to remove this 15-minute fair value gap because you know I'm not going to frame my trade from 1-minute chart. Instead of that, I have the 15-minute fair value gap as well. And if you go to your 1-minute, 15-minute chart, you will see that market didn't break that fair value gap. Okay, it didn't break that fair value gap. So either way, I'm not framing my trade from 1-minute chart. If you frame your trade from 1-minute chart, you are doing something wrong, and you can't do that. You have to frame your trade from your higher time frame. So from 15-minute chart, 15-minute fair value gap, hold the price, send it back. When market worked with the upper portion of this 15-minute fair value gap, I'm not going to think that market is going to fall and going to take that sell side liquidity. Instead of that, I'm going to think that it can give me a little lower run. I would love to take that lower run. Now I'm in 1-minute chart and I can see that market has closed perfectly this unfilled area. So what should I look for now? Breaker block. High, low, higher high. I would love to see that. In my breaker block video, I have explained why this is the breaker block. Why this is the breaker block, I explained in my breaker block video. So please watch that video. It will be insightful for you. Okay. So this is your breaker block over there. The lowest down close body close candle is going to be your breaker block. When the breaker block is valid, this candle, look at this candle. This candle closed below this breaker block is valid. Now, after being a breaker block around that area, you will expect that market will tap to this breaker block, you will take your entry. But here, in that type of situation, you saw that market never gave you the entry setup. That means you are unable to take your entry. Here, depending on that breaker block, you are just unable to take your breaker block entry. This is misfortune. Before today's session, I told that today's price action is going to be too hard, so hard. Okay, this is really so difficult price action, today's price action. And why I was expecting that, I explained that to my live streaming. That is also not important to explain over here. So over here, this breaker block didn't let me into the market. I was unable to participate in that run from that breaker block. So I'm going to remove that breaker block. Instead of that, I would love to show you something else. What else do I want to show you? Market went higher, tapped to the high of the unfilled area, at the same time the last parallel gap. Then market fall. Make this swing low. Look at this swing low. This swing low has traded that parallel gap, exactly to that parallel gap. Then market went higher, trade that last parallel gap from that specific leg. It has already taken the liquidity by that run. This retracement is just for making that swing low valid for shifting market structure. After went higher, boom, it has given you the market structure shift over there. So let me mark the market structure shift. Anybody has any complaint about that market structure shift? You should not have any complaint, because this is a perfect market structure shift. Okay, perfect market structure shift. Now compare this market structure shift with that market structure shift. What happened? Swing low, market went higher, take the liquidity, perfect. Went lower, didn't shifted the market. Went higher again, make a swing high. Went lower again, make a swing low. Went higher again, make a swing high. Then shifted. And what happened over there? Went higher, take all the liquidity. Went lower, make a swing low for shifting, valid swing low for shifting market structure. Went higher, trade that parallel gap. Doesn't need to take that high because market has taken already that high. All I need to see that is it making any buy sell liquidity over there or not. So you can see there is no buy sell liquidity, no relatively equal highs. It has made a swing high, boom. Very nice market structure shift. Where is your parallel gap? Let me mark the parallel gap. Here, this is your parallel gap. Where is your breakaway gap? Here, you don't have any breakaway gap. Just simple parallel gap. Is that immediate reaction? Look at the very next candle. Trade that in that parallel gap. Why you are looking for sell? Because you know that market has taken all the buy side liquidity. It is going for the sell side liquidity. Tap to this new opening gap high, went higher one more time. The reaction you are seeing, this is as your reaction from the new opening gap. Reached until that 15-minute bearish parallel gap. It has traded that unfilled area to build a breaker block. After that, at the same time, when it is trading this parallel gap, this is the last parallel gap, and you know that I told in my live, keep that in your mind, that unfilled area, if it is filled, you will start to look for the breaker block. So over here, when market has traded over there, you are looking for sell only, right? You got the market structure shift, very nice parallel gap. There is your entry, your stop loss maybe above that high. Nothing wrong, because you can see it's just 9 handle or something like that. So just let me put it over there. So 11 and something like that. Where should be your target? This is the part for all of you guys. Where should be your target? Now look, this low and that low. What do you see? What do you see? Relatively equal lows. Isn't it so clean? Very nice relatively equal lows. Your trade should be until that area. This should be your trade. 29 handle. The risk to reward ratio is 1:2.57. Just I could put it over there and could make it 1:381, but I'm not interested to do that. Instead of that, just put the logical way, the stop loss, just put it over there, cover the last parallel gap from 1 minute chart, put it over there, target this relatively equal lows. You should not target the extreme low from 15-minute chart. You don't need to target over there. Instead of that, target some kind of relatively equal loss from 1 minute chart. Now, what else can you do? You can take a partial over there and you can hold your trade until the last parallel gap. Now over here, if I mark this one, look over here. That is the last parallel gap from 1 minute chart to that specific leg. Below this one, you have this last parallel gap over here. Look, you have this last parallel gap, right? Instead of that, you don't have any fair value gap. So you don't, if you are overzealous, yeah, obviously you can hold your trade until that last fair value gap, no worries with that. But here you have to take the partial. At the same time, you should not think that market is going to fall dramatically for the all-time low over there. Why? Because from 15-minute chart, you have seen that market worked with the upper portion of that 15-minute bearish fair value gap by body. It worked with the upper portion. That means market is not going to fall dramatically for the unlimited time. Okay, it's not going to do that. So here the best option is to close your trade around that area. This relatively equal loss, which is your obvious liquidity, and so clean sell side liquidity. You should target that sell side liquidity. Here risk to reward ratio is 1:2.83. Very nice risk to reward ratio. Trust me, brother. If you hold it until over there, it's 1:2 near about 5. Okay, but I'm not recommending it to you. Instead of that, I would tell you that just take that entry. Now tell me, this setup and that setup. Did you understand what is wrong with you? Why you are forcing the market to give you the setup? There, this setup, why you are seeing this is a market structure shift when market has made so many swing low, swing high before the shifting market structure. How many swing low, swing highs market has made over there? Either way, this setup is also valid, but over there you will be stopped out to the break even if you take a partial below that low, because before that fall below that low, if you take the partial, maybe you will be little profit, but otherwise you will be you will stop out to the break even. I'm not interested to mark that setup because that is illogical. I will force the market to give me the setup. I don't want to do that. Trust me, brother, I don't want to do that. Instead of that, I would love to go for this one. Is it hard to notice? The only thing you are missing is you are forcing market. You are not waiting. You are not patient enough. You don't see how the fair value gap is working, how the 50-minute bearish fair value gap is holding the price. If you are bearish, it should work with the lower portion. It didn't work with the lower portion. That means it's not extremely bearish. So that's the part you have to keep that in your mind. Okay. Then market came here. Where did it came exactly? Can you see? Now, this is the part I tried to explain. This is the last fair value gap, right? Now market, look, market went higher, right? This is from 1 minute chart. Can you see a single body to the lower portion of this fair value gap, to that fair value gap? A single body. Can you show me that? No. It worked with the upper portion with the body, right? It worked with the upper portion. That means this fair value gap is holding the price. Look, every single time price came, bodies failed to go below this constant encroachment. Now, brother, it's been a long. You are with me. It's been a long. It's time to go little deeper, little work. You should work little more with the fair value gap. One of my sister Leah, she asked me a long time ago about this constant encroachment. How should we use that on? Now I'm trying to teach you this thing. This is the part you should learn, and nobody is going to explain this to you. When you should see this thing, you should think that no, market is extremely bullish because the last fair value gap lower portion is not working with the bearish body. Now, if you are thinking that market is going to fall, what should you see over here? You should see that bodies has worked with the lower portion of this fair value gap. Then it can go higher a little bit. But even if it go higher, you will be oversure that market is going to fall again. You will be oversure that market is going to fall again. But when you have seen this 1, 2, 3, 4, how can you say that market is going to fall? Instead of that, you should think market is going higher. Now this is from 1 minute chart. I am now going to 15-minute chart. Now I am going to remove this setup. That was the setup from the PM session. Okay, I'm going to remove this unfilled area and all of these lines. Okay, all of these lines. At the same time, this fair value gap is also I'm going to remove. That was the from 1 minute chart. I would love to mark this bearish fair value gap one more time. So over here, this is the bearish fair value gap. Okay, and here when market went higher, tap to this new opening gap, went higher. What did I say? If market fall dramatically, you will always wait for a bullish fair value gap. So over here, this is that bullish fair value gap. Guys, this part you need to understand perfectly. Very try to understand this part carefully, okay? Very important. This part is very important. Do I have any buy side liquidity? No, I don't have any buy side liquidity. Market has taken all the buy side liquidity. All the buy side liquidity has taken. Only I have the sell side liquidity. When market has went higher, I know that it is going to trade that bearish fair value gap. Then it will fall. When it will fall, look at this bearish fair value gap. What I will expect, this fair value gap will be broken and market will keep going lower. That means I'm not expecting this bullish fair value gap is going to hold the price, send it back higher for the buy side liquidity, because I don't have any buy side liquidity. Do you understand? This is how I am going step by step. First, when market tapped over the take the liquidity, then went lower, I'm bearish. I don't really would love to see the reaction from that new opening gap, but unfortunately I have seen that market has been rejected from that new opening gap. No problem, market left that bearish fair value gap over there, so it is going higher. I am not in the market. It came here, I will start to look for sell. When it reached until that area, at the same time it left some kind of bullish fair value gap. I'm not expecting that this bullish fair value gap is going to hold the price. So the reaction from that bearish fair value gap, market is going to fall. It is going through this bullish fair value gap. Let me change the color actually. It should go through this bullish fair value gap. That should be my expectation. Now, how can I be so confident that market is going through this fair value gap? I will get confidence from the price action around that area. Again, the same part. If market would love to go lower and go through everything, it should not react with the upper portion of this fair value gap. What happened over there? Even one candle has closed above this fair value gap, that bearish fair value gap. You are bearish. You are expecting that market is going to fall, but you have seen that even this fair value gap is broken already. Now it is fake breakout. I accept that fake breakout, so I can still frame a sell setup. But here I'm not extremely bearish anymore, because I saw how many times market closed above the constant encroachment upper portion. It worked how many times with the upper portion of that bearish fair value gap. So I'm not interested to hold my trade for too long. Then when market came here, this is the same fake breakout. Look at this bullish fair value gap. It worked with the upper portion of this fair value gap. The bodies worked with the upper portion of this fair value gap. Just one body closed below this constant encroachment. I didn't get it tick by tick, but still, just look, compare this thing with that thing. You will understand the part I'm telling you. Why it worked with over there. To trade that inversion fair value gap. There. Just look at this inversion fair value gap over there. Why that is inversion fair value gap? Because this low failed to take that low. Now I'm not interested to talk about the inversion fair value gap. Instead of that, I would love to talk about this one. Now it came here, and you saw that market is working with the upper portion of this fair value gap. What should you think? Are you going to take buy? Should you look for buy? Now I'm going 1 minute chart one more time. And from 1 minute chart, you saw that market came here. It is working with that bullish fair value gap. Then dramatically it went higher. Am I going to frame a buy setup? No. Why? Because I don't have the buy side liquidity. No, brother, you have some buy side liquidity maybe from 1 minute chart. I don't know. Do I have or not? Maybe you have seen some kind of clean buy side liquidity from 1 minute chart. Is that your bias? No, your bias can't be the liquidity depending on that 1 minute chart. Your bias should be depending on 15 minute chart. So you can't look for a buy setup over there. What should you look for? You should think that market is going to be choppy or accumulating. It is going to be very difficult to trade because you don't have the buy side liquidity, and this bullish fair value gap is going to hold the price. So from there, around that area, you are not going to touch that market. Absolutely, you can look for a sell setup when it will be back in this bearish fair value gap. If you see it has been rejected from the low or the constant encroachment of that bearish fair value gap from 15 minute chart, maybe you will be able to frame a sell setup. Otherwise, you should not look for the buy. You can't look for the buy. Now, I could simply tell you that there was the setup. I mean, market has made some kind of what to say. I mean, it went higher, take all of the liquidity, everything has taken. Then market shifted somewhere. I don't know what. I mean, over here, any market 22 YT model or not. But here, I actually look for the breaker block entry. Why? Because here I have another 22 YT model, and this is that unfilled fair value gap. When market has filled that unfilled fair value gap, I will look for high, low, higher high. The lowest down close candle is going to be my breaker block. Okay, so over here, if you take a closer look, I have this where is it actually? Here, this is the breaker block. So let me mark the breaker block around that area. Here, this one, it is valid. This breaker block is valid by that candle. See, look at this candle. When this candle closed below this breaker block, then it is valid for as a breaker block. The very next candle tap to this breaker block, I will take my entry over there. My stop loss will cover the mohawk of the breaker block, and I will target some kind of relatively equal lows from 1 minute chart. Now you can see, yeah, just maybe somewhere here. Okay, just this low or the last fair value gap around that area. Anything you can frame any setup, but this entry I'm not interested because it's the entry around 345. Exactly 345 it has given me the setup. As I told, no entry is valid after 344. No entry is valid. So you can't take that entry, though it was a setup. And you can't look for the buy. You are not ready to let this buy run go, that buy run go. That is the problem with you guys. Now over here, if you take a closer look, that bullish fair value gap hold the price, send how beautifully send it back higher and went through this fair value gap perfectly. Now I'm going 15 minute chart one more time. It's important, okay guys? Okay. Now I'm in my 15 minute chart one more time. In my live, I told something to you. Remember? Constant encroachment rejection. What should you expect? Lower part rejection. Did you get the lower rejection from there? No. Did you get it over here? Absolutely. Why market went higher? To give you the lower rejection. Now, I don't know market is going through everything or not, but I am still bearish. Why? When market fall here, what it left? Relatively equal lows. See this low and that low. They are relatively equal lows. Below this relatively equal lows, you have this extreme sell side liquidity. What do you have now? Sell side liquidity only. Do you have any buy side liquidity? No. At the same time, you have seen that market, the constant encroachment rejection came back again to the lower part. I am expecting some kind of rejection from there. If it was inside the session, I would start to look for sell again. Okay. So guys, it's maybe little longer video, but if you really understand the thing I explained over here, your trading is gonna be changed for forever. I'm trying my level best, harder and harder and harder to teach you this simple logic from ICT concepts. If you understand this simple logic, how to use the fair value gap, how to use the liquidity, and how, why and when you should let some run go and when you should participate in this price action, you will be astonished, brother. Trust me. If you just follow everything I tell you, every single day I come to my live, I frame the winning trade. At the end of the day, I'm in green. How can I do that? Every single day. I call that I'm the wizard. That's a funny word, but how do I know that? This is how I know that. This is how I predict the price. When I see this buy run, I didn't get panic because I'm not interested to take that buy. I don't have any buy side liquidity. I know why market is going higher, but that doesn't mean I'm going to frame a setup. You can't look for that setup because you don't have the liquidity. Yeah, that is logic that market is going to trade that low of this entry fair value gap. This is not the first time. Constant encroachment rejection, it should be rejected from the low. So it reached until that area to reject it from that low of this entry fair value gap. So I would love to see that market is not going to going through everything. at the same time, I would love to see this order block, the highest up close body close candle. Why that is order block? Because this run has traded this entry fair value gap. This is the highest up close body close candle. So the opening of this candle is my order block over there. Look, the reaction from this order block, market went higher one more time and trade the low. I would love to mark the 50% of that order block, because the 50% of that order block is your mean threshold. So let me mark it here. The 50% of that order block is your mean threshold, where the price reached. Exactly where the price reached, brother. Now the guys who has closed the video beforehand, they are going to miss all of this information. And if you watched until this part, you will start to be confident. I believe so. Okay, you have this order block. It reached until that order block one more time before falling. I'm not thinking that market is going higher. I'm not thinking that. Yeah, if market can close above that entry fair value gap, then I will have a buy run until this last fair value gap. But that is also low probability. The high probability is only and if only market can close above this last fair value gap, then until the all-time high, you are safe to look for the buy. So this whole area, you are just helpless to do something. When you are here, you are good to go for selling until this new opening gap. If market is very near to this new opening gap, you are not allowed to take sell. You have to wait to break this new opening gap. If this new opening gap is broken, then you are good to go for this sell side liquidity, or maybe until here if you find some sell side liquidity or something like that, then you are good to go. So some area in this market, you should let it go. I had nothing in my chart. I marked everything in front of you guys. I just showed you everything in this video. So I started with a clean chart, and I am going to finish my chart like this way. Make sure that you have marked every level I have marked, watched this video perfectly, studied it. Okay, just don't watch the Netflix, because if you watch it as a Netflix or the movie, it's not going to help you. Make sure that you have studied this video. It's all full of information. Make sure that you understand all the information. If you have any doubt, don't forget to let me that to the comment box. I will always try to help you by replying your comment. I never ignore anyone's comment. Okay, before closing my session, I would love to ask the like one more time, guys. Please don't forget to give me the likes, and if you are new, don't forget to subscribe to my channel. So until the next video, cheers.